PPI inflation report just came in lower than what was expected, but markets are not pushing up higher. What's going on, guys? It's Ricky with TechBud Solutions, and I'm here to break it all down and everything that you need to know about today's series of reports. I really hope that you learned something new, and if you do, please consider dropping a thumbs up and subscribing if you feel like we earned it. The first thing that I quickly want to talk about is the NASDAQ market. We are in the green, but barely. From where we opened up at, it looks like the market was going to get a really strong start. The PPI report came out much better than what was expected, just like we talked about yesterday. If you wanted markets to go up, you would want this inflation report to come in lower than what was expected, because this would support a rate cut on the next FOMC rate decision, which is September 17th next week. But inflation, if it begins to rise, as tomorrow we have the CPI report 1 hour before the market opens, that wouldn't support an aggressive rate cut because cutting rates is inflationary. So that was the big thing. We want inflation to come in lower if you want markets to go up based off of the expectation that the Federal Reserve could be aggressive with this first rate cut. But why are they going down? We talked about this a few weeks ago. Is this a buy the rumors, sell the news type of approach? Where if you look at the past few weeks, you can see that the markets have been kind of struggling and trading within this general range of highs of right around 585 to a support of right around 560. Why? Why, if now the Federal Reserve is finally going to start cutting rates, if this is what the market's been wanting, why is it now no longer pushing up? Is it because it's already priced in? Well, it sounds like it, right? If we pay attention to the actual report that got released today, I want first for you guys to be able to see. Core PPI came in at 2.8% versus the expectation of 3.5%, significantly cooler than what was expected. We expected a 0.3% increase. We only saw a 0.1% increase. PPI report, overall PPI, came in at a negative 0.1% decrease, and it came in at it had an expectation of 0.3% of an increase. So again, significantly cooler than what was expected. 2.6% was reported versus the expectation of 3.3%. So if someone were to ask you, hey, did you see those reports that came out today about inflation? Yes, this is inflation on the producing side of things. And based off of what was expected and what was reported, inflation on the producing side of things came in significantly cooler than what was expected. But tomorrow is the big day. It's the CPI report, Consumer Price Index report. This is a time where the market really cares more about consumers than they do about producers. The producers is often viewed, the PPI report is often viewed as a report that will or can later forecast what can be passed down to the consumer. But nonetheless, the PPI report is definitely not as important or influential to the stock market than the CPI report. So tomorrow is the big day. If you want markets to go up and you want the Federal Reserve to cut rates aggressively, you better hope that CPI comes in lower than what is expected. If it comes in as expected or higher, then that wouldn't support an aggressive rate cut. But again, based off of the most recent Fed rate monitor tool, a rate cut is going to happen based off of this probability tool. It's just how much. Is it going to be 25 basis points or 50 basis points? The unfortunate part about this is that, again, markets continue to drop. I don't know if this is frustrating any of you guys. At least for our team, it really didn't, because we weren't really that surprised that markets began to gap down. It's the buy the rumor, sell the news. But a lot as of right now, we're just taking it day by day. There's no reason to try to predict on what's going to happen next week when we don't even know what's going to get reported tomorrow and how the market's going to interpret this, right? We have stocks that are skyrocketing 30, 40% after reporting worse than expected earnings. It's a very volatile time to be invested and paying attention to the market. So this is a great reminder for beginners that it's a great time to pay attention, but you don't have to trade all of the hype, both long or short. Please be very intentional and very calculated. The last thing that I wanted to show you guys very quickly is an update also on what just happened. The judge blocks President Trump's ability to be firing Federal Reserve Governor Lisa Cook. We talked about this. Not enough people are bringing this up because now they don't care all of a sudden. But remember when Trump fired Lisa Cook because of possible fraud allegations? Well, again, surprise, surprise, you cannot fire anyone based off of allegations. She has not been found guilty. So therefore, he has no authority to fire a Fed member based off of an allegation. Again, it's kind of just having common sense. When you understand that, you're not really going to be surprised by this news, which again, is just another attempt for Trump to try to control and influence the Federal Reserve, right? So we talked about this. PPI report came in lower than what is expected. This is the current situation. Job data has been revised by 911,000 jobs, meaning that on average, around 76,000 jobs were reported each month that were not actually real or created. This was the revision that we received yesterday, the biggest in history. 911,000 jobs in the past 12 months up until the March of 2025 were reported that were not actually created. June marked the first month that the U.S. job losses, since 2021. PPI inflation report unexpectedly fell 1.2%, decline in the second decline in the 17 months. U.S. employment rate rose to 4.3%, the highest since July of 2024. And then awaiting August CPI and PCE report, which last jumped in July. So this would be the fourth consecutive month of a rising CPI report if it comes in higher than what is expected. Again, these are all still reports that are still yet to be released when it comes down to the CPI and the PCE report, which are the two, in my opinion, most important measures of inflation. And the last thing is just showing how the U.S. economy is doing. A record $18 trillion in U.S. household debt, 446 big bankruptcies in 2025, the most in 15 years, $1.6 trillion in deficits in the last 10 months for the year of 2026, and $37 trillion in debt, the new record. This is our thriving economy, yet markets sit at all-time highs. We've said it once and we'll say it again. The stock market is not a representation of the actual health of our economy. It is a projection of investors who often are very greedy and like to project instead of actually see what is currently going on. So if you are feeling the weight of the slowing economy, it's not just you, it's every American. It is slowing down. We have a weak labor market. We have inflation that's beginning to rise. Stagflation is here, and we'll see how things continue to develop. I'll do my part in keeping you guys up to date. And like I said, I trade live every single morning with our LPP team. If you ever want to tune on in to stay the most up to date, it's the second link in the description down below. You can sign up today and start watching me trade live as soon as tomorrow. Like always, let's make sure that we end the year on a green note. Take care, team. Happy Wednesday.